Yo.
Hey, Chris, how you doing? You
Good,
good?
man. How are you?
I'm doing good. Looking forward to this week.
Yeah.
Interesting price action. Terrible last week. The price action was crap.
Do you know what? I had a really good week.
Yeah? Oh my
Yeah, I had
days.
a really good week. Especially the start of the week wasn't great.
You must have been scalping because there was no trending moves. You must have been trading a range or something. I'd be surprised if you caught a nice breakout move because it was.
Nah, I did. I caught. So I'm trading the DAX a lot more now.
Oh, there you go. So it's not FX. So
Yeah. So
that makes sense. Yeah.
Basically, I've been playing around for a little while with kind of different FX pairs.
Yeah.
Wednesday, Thursday. Yeah, I had a really good week. Playing around with different FX pairs. And obviously I trade Euro USD as my go-to, right? And as you know, I've been playing around with like gold for a little bit, and occasionally you catch some good moves, but then it comes back and bites you. GJ, and again you catch some good moves, but then it comes back to bite you. And there was I just kept finding that there was so much influence on all FX pairs. You can't get away from the dollar influence. You just can't. You can't.
Yeah.
And I trade. I'm looking for like real intraday kind of. I would class myself these days as like a big scalper. I think that's the best way to look at it. Is that I'm looking to get in and out in a session. So I'm not looking just to catch like a few pips. I'm looking to catch like a sessions move. So day trade, intraday trade. I don't know what that's classed as. I think there's too many names these days. I just found that everything was just so heavily influenced by the dollar. Like you try and trade GJ, and it's
100% all the time,
GU and UJ, and it's all dollar based. And so basically, I've been playing around for a little while, trying to find like a second pair that I can really concentrate on. And DAX is just one of my students, funny enough, was trading DAX, and I kept seeing these positions. Then I went and did some testing on it, and it is unbelievable for my strategy. Like unbelievable.
Awesome.
Yeah. So we had a good finish to the week. To be fair, I think any week when you don't have any big news until like Wednesday, Thursday, they're often a bit slow, aren't they? You don't reckon?
I didn't even hear you there. Sorry.
Oh, I said that any week where you don't have news till kind of like Wednesday or Thursday, they always seem to be a lot slower.
Oh yeah, all the time. Yeah.
The news kind of injects liquidity, doesn't it? It's the news which gives you that liquidity, which then puts a bit of volume into the marketplace, and takes liquidity one side and gets the other side. And so yeah, I always find them a little bit slower. Did you catch anything last week?
Nothing for me last week, to be fair. I was looking to get some. Well, I wanted to buy the dollar, obviously. I wanted to sell the euro, etc. Nothing really came. And this week, I think the dollar's still climbing. It's about to reach the top. But I like to look at DAX as well, because I used to, the first pairs, believe it or not, the first things that I was trading when I first got into trading back in 2012, 2013, whatever it was DAX and US 30. I came in as a scalper. Literally.
Exactly the same with me.
It was all right, but I was scoping with no context behind everything, in and out. I was trading the 5-minute candlestick, just reading it based on price action. So it opens, there's a pullback, and you set up the spike with a little bit of technicals, and you're in and out, but it really delivers a lot of pips. So I'll check that. Now I've leveled up a little bit since then.
Yeah, I noticed when I used to like the DAX when I was trading kind of in the early days, and this is when I'm talking like I was like using like a spread betting broker, like it wasn't even like CFDs, it was like that. Well, it's basically
CMC markets, one of them.
CMC markets, that's it. Yeah, so I was using CMC market. My first trading app that I downloaded before I even knew what TradingView was.
Oh, right. Yeah. And then when you enter, you've got like a little cool yellow arrow. Do you remember?
Yay.
I love it. They need to do that with MT4 and MT5.
Yeah,
that's
funny.
I want to check out DAX much.
Yeah, honestly, go and check it out. I mean, for my strategy, it's really, so it loves external liquidity. So it loves printing ranges and then sweeping the external liquidity. Right, I'll just show you. It's probably easier.
Yeah. What's it called? What's the ticker?
Germany 40.
GER40.
Germany 40, yeah.
GER40, German 40 index. That one, yeah?
That's it.
First one, so Germany 40. Okay.
Yeah, so I use the forex.com feed.
Damn, it looks very clean.
Honestly, it's like, where is it?
It looks clean.
Yeah, so for me,
not like indices and stuff.
Yeah, it's just really neat and tidy. So for me, where I'm trading like external liquidity levels, it just seems to like if I jump up to the 4 hour, you can see it really, really clearly. It just seems to come really cleanly, take liquidity, and then move off.
Yeah.
And then you'll get other moves where it makes a really obvious sweep on liquidity, and then we'll just continue on. And I was doing a little bit of testing on it, and for me, it's just so clean. It's just so clean. And honestly, it's quickly become my favorite pair. So the trades I took last week, I got these 3 trades. So I've got some really nice positions out of here. So nice bullish momentum. I won't go into a huge amount of detail, but nice bullish momentum, clean liquidity sweep, and then I get my classic kind of go-to setup, and I enter, and that was a massive trade. That was a 6. Unfortunately for me, I took most of my profit off here. So I took most of my profit up here, but as you can see, it kept climbing. This one was a little bit higher risk, but I had real clear bullish momentum. So I was waiting for this sweep here. So just to explain the theory of that trade, but to a higher time frame, you can see it clearer. So this was my range, and especially when pairs are particularly bullish, I find that they'll come down to that 50% line, and often that's all they need. That's all the liquidity they need to continue. So that was a really tight entry. Again, I got my classic manipulation set up, and I ended off that. And then Friday we had the exact same thing again. So Asia printed, nice tight range. Bearish London session, swept liquidity, bullish price action, and this, as you can see, kept on going and going and going. It came out at 3.5, but it went up to like 6 in the end. But it's just 3 really, really beautiful, clean trades. Yeah, it's really, I'd highly recommend anybody, and you guys watching this at home, hello everybody, by the way, hello viewers, have a look at the DAX. If you trade any kind of liquidity concepts, which hopefully all of you do, right? Because you'd be mad not to trade liquidity these days.
That's quite cool. Let me do a quick back test.
Yeah, go on. Do you know what? Let's do that then. Let's do that. I'll be interested as well. For those of you who are watching, I'd be interested to see what kind of apps and trading platforms you used when you first started. Whether you guys use CMC Markets, or I think a lot of people use it. Is it IQ Markets?
IC Markets is a pretty decent UK one, but CMC was the one where I first started.
Yeah.
Well, everyone's spoiled now with prop firms.
I know. If anyone's maybe anyone out there like traded options, I remember having a look at options at first.
I've done some options.
Time contracts, weren't they? You would take a position and you couldn't close it until like the time window had closed.
At a certain time, yeah. I would love to jump in options now, because now I'm at a completely different level, and I can anticipate when price will close at a certain day.
I still don't understand it. I don't really get it.
No,
I don't really understand what it is, or why there's a time window on it. Why can't you just close your position when you want to close your position?
Can't. It's the thing with options. That's the thing. It's the thing with options. There's futures. I'm looking into futures, but options would be interesting. I've done options once. I've done a demo for a while. Long story short, I thought I made it when I flipped 3K to 20K, and then I used the money to continue to trade in Barbados, and I basically just lost everything. And that's when I know what, it's not for me, like that. It's long. but anyway, let me do a quick back test.
Yeah, do a quick back test. So today, guys, those of you watching, we are discussing trading psychology hacks for bigger profits. So we've got some little gems for you later to really help you guys, master your strategies. The one big thing for me, and we talk about it quite a lot on here, the one big thing for me is just data. Data is so important, and not enough people collect data. Now that could be as simple as completing a trading plan, right? It could be simple as completing a trading plan. It could be as complicated as logging every single trade that you take and measuring if it goes to 1R, 2R, 3R, or 4R. Okay, trading psychology hacks. For me, I feel like the whole psychology debate it's kind of like it's a very on-trend, fashionable thing for traders to talk about, and I think because it's really difficult to put it in properly. It's really difficult to, people think that if they read Mark Douglas's Trading in the Zone, that they can then master their psychology and it'll make them a good trader. And it seems like a quick fix. I think that's why it's so fashionable to talk about, because it seems like it's a quick fix, as in you can read this book and you will be a better trader. There's definitely lessons to be learned from the psychology books, but to get good at trading and to master your psychology, for me, it's always been about data. The more data I collect on my strategy, the more back-tested trades that I have, the more journal entries that I have, for me, it's all the better. So I as a starting point, and we'll put that as number 1 on our list. I'll add that into the comments. 1, okay, collect more data. If you have more information, you're going to be able to make better decisions, right?
Oh yeah.
How's it looking then?
It's clean, extremely clean, for sure. Yeah. I'm gonna have to use that. I'll be really good with this, I reckon. Is that, the indicator that I told you about?
Yeah.
I think that will be really good for this,
Nice.
Interesting. So yeah, nice little trade here. At what time did it come? 3 in the morning. What the hell? Okay, so no trade.
Might have to catch it a little bit later then.
Yeah, London, cool. I can't see anything here. Then again, there is.
Yeah, I see it.
Yeah, the pounds are clean.
Yeah,
definitely clean. 5. The only thing is, I wouldn't have taken this trade because there's no liquidity on the left. But, oh well.
What time frame are you on? Oh,
I'm on the M15. But
have a look at the 5 minute, because there's
maybe the M5, but yeah, there's still nothing.
Yeah.
Again, there is something here.
That's exactly the trade I took.
Yeah,
What day is that? Thursday last week. Yeah, that's exactly the trade I took. So that's at 50% of the range as well.
50%
If you
of the range, yeah.
do like a range finder from the low to the high, you'll see that's exactly at halfway. So
do you take the 50% of the previous day? Because that's what I do. Or do you take it over like?
Just literally use the leg that we're in. So I take from there. Yeah, that's it. I take from there.
Oh, okay, cool.
So that's my trading range. So that's where the last push has originated from and finished in. So the first place I need to get back to. So if I have bearish price action come in, which by your number 3, we've got clear bearish price action come back into the marketplace. Well, you've probably got it between your 2 and your 3. You've probably got bearish price action there as well. Yeah. So once I've got confirmed bearish price action, for me and my trading plan, I need to hit the 50% before I can consider any longs.
You got it.
There are some exceptions to that rule. Like if we're really, really bullish and I've got a really tight range on Asia, and maybe where your 2 is, that most recent 2. So if I've got a really tight range on Asia, it's Thursday or Friday, which it is, and I get a clear sweep of Asia and then my reversal pattern or my entry model, then I will take that if it's particularly bullish. I know it's a riskier entry, and I'll only take it on like Wednesday at a push, but definitely Thursday and Friday. Like if that position was there, yeah, like that. So if I had like a bullish price action coming there, if that was on a Monday or a Tuesday, I would ignore it completely, because I know that we're probably going to get manipulation, we're probably going to get pullbacks, etc., etc. But if I had a clean setup there, I would take it that high. But most scenarios, I much prefer to wait till a pullback till it's 50%, because for me, then that shows me that the price range has rebalanced itself. It's come back to a discount area, and that's the first stage that the institutions and the algorithms need to come back to, so they can rebalance some of their orders. But I just find like it just, I hate the word. I personally hate the word trend, but I find like it trends really well.
No, yeah, for sure. DAX is famous for trends. Yeah, for no, 100%. Yeah, I would love to get back into it, and I'll add US 30 into my list.
I've never been able to get on with US 30.
In what? I don't know. It depends on the broker, isn't it, and the platform.
No, I mean as in just the pair, the indice itself. I've never been able to get on with it. I've never been able to understand it properly. I found that when I
very
had to,
similar to Germany 30 though. Very similar.
I might have to go back and have a look at it then.
Yeah, it's very similar. It's the equivalent of probably trading, I don't know, let's say Euro USD and AUD USD. They're quite similar.
Okay.
But this is my experience from like back in the day. It might be different now. But yeah, just looking at the patterns, it looks really, really clean, to be fair. Yeah. It respects my strategy, but it looks then. I do something similar with the 50% retracement, but I don't do it on the original leg. I do it just based off the previous daily range.
Previous day's range, okay.
And I'll kind of use my fib parameters. Okay, so look, that banged on the 50.
It's 50 as well, was it?
Yeah, bang on the 50, but because there's FX, I don't use the 50. I use the 67, 78, 88. Yeah. So I guess stacks would be a little bit different.
So you're looking for the golden zone then?
But remember, I do that with FX. Obviously, this is a different kettle of fish, so I might have to adjust to it, and maybe 50% would make sense. But this is why we backtest. But yeah, man, this looks quite cool.
There you go. What you predicting kind of higher time frame? If you were to do your higher time frame analysis, what are you seeing on the DAX?
Wait, let me just do this one quick.
Cool.
This looks that looks pretty decent. It's a nice point of interest. Fair enough. Okay. Oh, DAX, yeah. Down.
I just and again, like I said, one of my students was trading it, and I was like, "Why are you trading that?" He was like, "It seems to work pretty well." And I went and that night I went and had a look at the chart just on the 4 hour, which is like my kind of daily higher time frame, I suppose I would call it. That's what I'm pulling my ranges from. I had a look at the 4 hour, and it was just like setup after setup after setup.
No, for sure, 100%, yeah.
And this, this comes back to our original point. We're talking about, trading psychology hacks for bigger profits, right? Again, data, right? You're never finished with your trading strategy. You might have it to a point where you're profitable, but then, for me, I'm like nearly 9 years in now. Probably about 9 years into my trading journey now. And, I've just found within the last couple of months, I've just found a pair that now seems to respond to my trading strategy really, really well. And I think, once you've got your straight trading strategy nailed, go and test it. Go and test it elsewhere. See if you can find better results than you're currently getting. And we're not saying jump into live markets and start, taking a load of trades on a pair that you don't understand. But like, I found with DAX, just go and do some testing. Go and do some chart markups. Do you see that you are, you're doing well, or do you see that your strategy is performing well? Go and check it out. I'd highly recommend that you go and test your strategy on different pairs. And when you're done with a pair, if the results are better, great, you can add it into your trading plan. If the results are worse, then leave it, chalk it up, understand that it doesn't respond to your strategy, move on to the next. The back testing process is, never ever done, in my opinion, and there's always refinements to make as well. So I'm going to put that down as number 2. So number 2, refine your strategy always. Okay, it makes you a master, right? It makes you a master in what you're doing. How many refinements have you made in the last 12 months to your strategy, Diego?
Refinements, as in completed refinements or ongoing?
How many tweaks or changes have you made to your trading plan in the last 12 months?
In the last 12 months, probably that's very hard to say. There's probably been around 30% difference in the strategy.
Exactly, right? And Diego is a well-established trainer, coach, trader. He knows what he's doing. He's still making changes. Same for me. Your trading strategy is never really done. You'll get to a point. It's like they always say with artists, right? If you're painting a picture as an artist, you've never really finished it, and you have to get to a point where you're like, right, I'm done now. This is my idea of perfection. You'll never quite perfect your trading strategy. There'll always be more that you can do. You've just got to get to a point where you've exhausted, I think, what your possibilities are. Again, we come back to this point, trading psychology hacks. Just keep working on your trading plan constantly. Every single weekend, I reach out to so many people at the weekends, and I put my schedule up. So I go, right, guys, this is what I'm doing on Saturday, this is what I'm doing on Sunday, this is my backtesting schedule, this is how many one-to-ones I've got in, this is the mentorship content I'm working on, this is what I plan to do for you guys, and mine's a little bit different because I've got a community of people that I've got to look after. But every weekend I spend my time working, and the amount of people that don't do any work at the weekend, they have a weekend off. For me, I'm like, well, I don't have any time. I don't have time to take off, right?
Exactly. I mean, the weekends, if you're like me, where you'll use the weekend to just improve, and it becomes obsessed, addictive. Because for example, you must have been so excited finding tweaks in Germany 30 and just seeing that it's working, and then obviously the following week you started trading it, you're excited about it. It just goes to show that you're always trying to level up.
Yeah, exactly. But then I think with trading, I think again, this is a common misconception. I think some people think that they can come into trading and they can just make it work by doing a couple of hours in the morning. They can log on, they can do London session, and they're going to make it work, and that's it. And they can watch a few YouTube videos, or maybe buy a course off somebody that they've seen on Instagram, and think that that's it. And it's the same mentality of thinking that you can become a professional Formula One driver by watching Lewis Hamilton on YouTube and expecting to copy what he does. It's not as simple as that. And I think a lot of people don't respect trading. I find that quite a lot. Do you get that, where there's not much respect for the career? Because I see it as a career rather than a hobby.
Yeah.
100%,
yeah.
And I feel like a lot of people don't respect it like they should. Like, I appreciate it starts for most people as a hobby, but I think then very quickly it needs to become a career choice. It needs to become something that you're serious about. If you want to make it work, you've got to find a way to, get that work in. And when the markets are closed or you're outside your trading windows, that's when you should be working. You should be doing your back testing. You should be doing your journaling. Oh, that's an unlucky one.
No, I caught this one, to be fair.
Yeah, caught that one. That's nice.
That actually did drop around 5 up, but there's another point of interest. I just wanted to check how the M5 works. So that one.
There you go. You three are up for the day. You're all right.
Yeah, well, I would have. Yeah, I mean, come on. Yeah, 4 hour, whatever. But I just because I know it's going to reverse from this area.
Yeah. Good morning, I am Boss Lady. Welcome back. Welcome back. Yeah. Not seen you for a while, have we? Where have you been?
It's been a minute.
Where have you been, Boss Lady? We've missed you. Question from Lawrence. How do you deal with trading indices on different prop accounts, though? Because they all have different... Yeah, you are right. So indices will often have slightly different prices and slightly different numbers. I think if you stick to the major indices...
Yeah, go on, sorry.
Oh, sorry. I think if you stick to the major indices, so if you stick to like your DAX, S&P 500, US 30, US 100, you should find unity between your broker and your feed. What you do have to make sure you've got, and this is definitely something that you need to just check in on, you do need to make sure that your broker that you choose on TradingView matches up as closely as possible. So you would go onto your MT5 or you go onto your Match Trader or whatever it may be, DX Trader, C Trader, whatever it is. Usually your prop firm broker, and this is I kind of see what you're saying now. If you're looking at different prop accounts and you have different feeds, yeah, that's something you'll need to check in on. So most of my accounts are with one prop firm, and actually no, I don't have any issues with DAX. So I trade 2 prop firms at the moment, and I've got one that has more than the other. Oh, that was a nice one.
Yeah, missed it though, because I had what's it called? I had the order here at this area of liquidity. Where was it? No, I had it here above the liquidity. And obviously it dropped, but yeah, it reacted off the order.
And would you not look for you would only ever get in at the top? You wouldn't look for a kind of a continuation entry down in that leg?
There's 2 types of entries. This is catching the actual top.
Yeah.
But my preferred entry for me personally would be on the H1, but then it would be roughly once price action pulls back, then I like to catch this entry here somewhere. That's my preferred entry. But this is more of the Hollywood hero kind of vibe.
Yeah, no, I get that. Yeah, sorry, coming back to you, Lawrence. So yeah, so I think it's one thing. So I trade 2 prop firms at the moment, 2 of the bigger names in the marketplace without naming them. And I personally find that I don't have any issues with DAX. I've not had any positions take me out on one prop firm and not the other. And I've equally, whenever I've hit a take profit, they've always taken profit at the exact same time. And I can confirm that as well, because my copy trader is set up to copy. So you can have 2 ways to set up your copy trader. You can set it up so that and this is something to be really careful of as well, guys. So a bit of advice for you here, okay? If you're using a copy trader, there is a setting within them that allows you to say, I want to copy across pending orders, stop losses, and take profit orders. If you don't do that, you have, let's say you have your CTI as your main account. Obviously, CTI is the main account, standard, right? And then you've got FTMO as your second account. If you're with one of these companies that has a stop loss rule, your CTI account is not taking across its stop loss unless you have that action switched on. So when it hits the stop loss on CTI, you will get taken out also on FTMO because it'll send the order. I would personally recommend Traders Connect, because I found the connectivity and the execution of trades to be the best with them over other tools like social trader tools. I know some people use like MT5 bots, EAs for that as well, but Traders Connect is a cloud-based trade copier, and I found the execution to be the quickest with them. So yes, your CTI account, when it hits stop loss, will close FTMO, okay? But if you have a trading prop firm that has a rule where you have to have a stop loss set, your trades will all be invalid because there's no stop loss going across with it. Mm-hmm. So coming back to my original point, I copy across all my TPs and I copy across all of my stop losses and all of my pending orders. The reason why I do that is because if there's ever a reason why maybe Traders Connect goes down, or the connectivity, or maybe the server at FTMO, which has happened a few times, the server at FTMO, to me, server FTMO goes down, but the server at CTI stays up, or the other way around, doesn't really matter, then you run the risk of either missing your take profit, might not be a bad thing because you might get more, or more importantly, missing your stop loss, which definitely would be a bad thing. Okay. And at least if the server goes down and you're with a decent prop firm, you can say, look, the server's gone down. I've been spiked out of this trade by like twice as much as I should have been. So, you know, I want my trade back. And they'll normally, if you work with someone like CTI or FTMO, one of the big companies, and their server went down and you missed your stop loss or you missed your take profit, they'll normally look after you. So that's quite good, firstly. But the real purpose of it is that if you make sure you copy across your TPs and your stop losses across, then you know your trades will normally be a lot safer. Anyway, I digressed a little bit there. Coming back to the point that Lawrence made, I've not found that any of my stop losses or my TPs have been hit at different stages between my two prop firms that I use. So just I would have a look, just make sure that there's no disparities. Probably, Lawrence, if you're using a prop firm where there's like a massive difference on the price of the DAX, for example, Germany 40, compared to your prop firm, or compared to another prop firm, or the broker feed, they might be using delayed data, because it obviously the more live the data is, I'm pretty sure it's more expensive. I know that with a lot of future contracts and things like that, people have to pay, like brokers have to pay more, don't they, to get the most up-to-date data. So I think this comes back to a story as old as time, where you just need to make sure we're using really good prop firms like CTI.
Yeah. Literally, but yeah, I've also never had issues with with any discrepancies in different prop firms, to be fair. And I'm the same with Lawrence. I stopped trading S&P for two reasons. One, the boomerang wasn't that good with it, but also the data is different. So when you do the order on one prop firm account, it's completely different on another prop firm, and you have to cancel it. It's just long. So I'm the same, Lawrence. I stopped trading it because of that. So yeah, makes sense. Also, regarding your higher time frame for that, Chris, very, 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 very bullish.
Look at it. It's beautiful. It's like someone's drawn it for you.
Yeah, it's got lots of room to climb, especially towards this area. So yeah, I'll just be bullish, very, very bullish.
Nice. I'm Boss Lady, coming with the source again. Yeah, repetition. Show up every day, even when you don't want to. Train even when you're not trading. Yeah, I love that. I love that. And that's the same for everything in life, right? Willpower, right? That comes down to willpower. We're talking about psychology today. I mean, Iron Boss Lady's given us one. Show up every day. You want a psychology hack? Turn up every day. Love that. Just like if you want to lose weight, stop eating nonsense food every day. If you want to get fit, you want to get hench, you want to get bulked out at the gym, turn up to the gym every day, even when you don't want to. You want to get good at trading, turn up every day. Just work.
It's discipline, isn't it? Because
100%,
motivation is fleeting, it's not consistent. Whereas discipline, that's it. It eliminates all the excuses.
Yeah, man.
You just show up at the gym and you go to the gym, and that's it. So I think motivation is overrated. It's fleeting. I don't pay attention to that. You have to go to it, even when you don't like to. Same with trading. You have to back test.
Yeah.
Even when you don't want to, you have to journal even when you don't want to.
Yeah.
Even if it feels boring or it just feels like just feels long, you still have to do it.
That's it, man. That's it. Yeah, and it's there's a couple of quotes that I often tell my community, and I remind them of this all the time. And one was from a podcast I watched a little while ago by Chris Willis.
Mm-hmm.
Yeah. He said, "The magic that you are looking for is left in the work that you don't want to do. And for me, that was so fitting. And it's like the magic that you're looking for, i.e., making it as a trader, passing prop firm evaluations, getting funding, getting payouts. The magic that you're looking for is lost in the work that you don't want to do.
That literally, that summarizes everything we just said. Literally, yeah.
It's in the back testing, it's in the journaling, it's in the getting out of bed at 10 p.m. because you've forgotten to fill out your trade journal and spending 20 minutes in your office filling out your trade journal, even when you don't want to, because the chances are if you go to bed that night, you're going to wake up in the morning, you're going to get on for London session, and you're not going to do it because you're going to be trading. And the mistakes that you made the day before, or the refinements that you could have picked out from the previous day's trading, you've now lost. They're gone. They're not there anymore. It's so important. The magic you're looking for is lost in the work that you don't want to do, and that's the one thing I always say to my guys. And that's a good little psychological a psychological hack for you, I suppose. We're kind of falling upon them. The other one is
powerful though. I think also it's how you can reprogram your mind to be in a state of mind where, yes, it's not what you want to do and the magic lays there, but if you can do the work you don't want to do, but then instead of you not wanting to doing it, you eventually start shifting. If I'm doing the work I don't want to do, that the magic's going to come. I'm going to be rewarded. So you start actually enjoying the hard work. Right. It's like the same thing with journaling. Back in the day, I wasn't a fan of journaling, to be fair. I just found it long. It was like a last end of the week thing. But as I gradually saw results and tweaks into the strategy, then I realized, oh my days, journaling is it's where the magic's at. Then I love journaling every week, right? And it's the same goes with diet, with gym, with whatever you're doing. So that's a powerful quote.
It validates the work that you're doing, doesn't it? That's ultimately what it's there to do, right? It's to validate the work. So I always say to people, just try it out, okay? I'll write you a daily routine every single day. So it's normally like pre-market analysis. So, again, if you want more profits, have a daily routine. Should we put these in these comments? So we got 1, we got 2. Number 3, the magic you are looking for is lost in the work you don't want to do. Right, number 2. Number 4, I'd say a daily routine. We did a whole podcast on this a little while ago, but daily routine, there you go. If you haven't watched it, go back and look at the daily routine, because it's highly recommended. And I've taken bits of that for myself, even as an experienced trader myself. But daily routine, what's your pre-market? What's your during market? What's your post-market process? That's so important because there's so many variables in trading all the time. You've got market conditions, you've got news events, you've got seasonal tendencies, you've got just the market being a knob. And because it is, right? And set yourself a daily routine. Keep some of your processes identical from day to day, so you can then start working out which of your processes are working and which of your processes are not working. So my pre-market is I go and I forecast every single day, and I record a video and I send it across to my students, and that keeps me accountable for what I'm looking for. Then I just trade what I've forecasted, because that's the one that I've planned. Not made any impulse decisions to trade that plan, because that plan has been pre-made before the market has opened and before I'm in my kill zones. Then post-market, what do I need to do? Well, I need to update my journal. I need to put it into my strategy tester. So I've got this strategy tester where I can put trades in, and it tells me whether it would be more profitable to hold it for a certain level or not. And then we just we build and we grow from there. And every single day you follow that process, and you put more information to your journal. And I always say to people, just try it for 30 days. So set yourself a daily process and try it out for 30 days, and just see at the end of it if you're better or worse off for doing it. If you're worse off for doing it, then you can not do it ever again. But I guarantee you, you will have found some progression, you'll have found some benefits, and you'll have found some, advantages from doing it. So yeah.
100%. And even if you don't have a community like Chris and I, you can still record a video of yourself talking about the forecast, just talking out loud. That's gonna not just hold you accountable, but you're reframing what you're planning to do, so it keeps it that extra discipline. And once you record a video, just before the trading session happens, or just before you're about to trade, just a few 15 minutes or 30 minutes before, rewatch it and replay it, and it will just give you that extra discipline, psychological cushion. I highly recommend it if you don't record your videos, because it's definitely a game changer for psychology.
Yeah, definitely. So number 4 then, so we're going to put daily routine. Run it for 30 days. 30 days. See where you end up.
Has anyone in the comments got any psychological hacks they'd like to share?
Yeah. What's your secrets? I'm boss lady. Been busy. Finished your workout. Ready to work. The same. I've just come back from the gym myself. Ready to look, see what we've got in New York. Although the markets don't look very good today. Whilst we're waiting for people in the comments, shall I jump on quickly and we'll have a look at some charts?
Yeah, let's do it.
See what we've got. So I haven't actually done my daily setup on Germany 40 because I'm out and about today. It's my girlfriend's birthday today. Sorry, tomorrow. So we're out and about. We got a bit of time off together. We're taking some time away from trading as a whole. I've done my Euro USD analysis for this morning. Let's just have a quick look. To be fair, probably not going to be taking any trades off this right now. It's Monday. I've just swept my Asia low. I did kind of want a sweep of some of these daily highs. So we might have like an accumulation, manipulation, and then we might be looking for distribution up. So if I was to take a trade right now, I'd probably be looking for a long. How I would take that, I don't really know. But, just very loosely. And, I'd be taking it something like that. If I got the setup on it, I wouldn't say I quite have the setup on it just yet. But that's the sort of trade that I would be looking at taking. I am starting to get some bullish structure. My higher time frame right now is obviously quite bearish, but I would, if I want to continue bearish, my theory tells me that I need some liquidity from the buy side to continue to the sell side. I need to fuel that move to the sell side to make a new low. If I want to be able to make a new low, I need liquidity from up here, or I need a big injection of like fundamental push, fundamental factors. So I am quite bearish. I'm stuck in this range that was printed last week as well. So I need to, ideally, come out of this range. I need to take a liquidity point on the high or the low. We were quite corrective last week in general. There were some decent positions, but we were quite corrective last week in general. So yeah, so I would like to see some higher prices. We've obviously taken out the liquidity of Asia this morning, and then we had a beautiful little sell-off. There's no real entry in there for me from what I see, but we had a beautiful little sell-off here. With Monday often being quite corrective, it would make sense to have a push higher, but certainly not a position that I would jump into just yet. I would need to see maybe a little bit more structure to come in, like that, then a manipulation. If I can get that low manipulated, and I can enter there. So, that would be my sort of setup I'm looking for. You watch this though. I guarantee it's going to play out and give me a massive like 4R trade. You watch. It was always the way, isn't it? Yep. Germany 40. So look at that. So yeah, really, really high on Germany 40. I wouldn't trade a bullish continuation on Germany 40 on a Monday. This is the sort of setup where, this is currently my hourly range that I'm in. Might even be it's not really my 4 hour, but it's definitely my 1 hour range. So I prefer to be trading a 4 hour range. It gives me a little bit more liquidity. That technically is a 4 hour range. It's kind of, we've got bearish structure. Yeah, it's an hourly range right now. So, I'm not in a rush to go in and jump in a trade in here. Certainly not on a Monday. Same sort of principle applies for me. I need some sort of liquidity taken. We have taken some liquidity from over here. Let's see what we've got over there. Might have even taken a weekly. Yeah, so we actually have just taken a weekly high. So we can mark that on. That's a dead weekly. And then we've got this major level, which I think is a monthly. Yeah, so we've got a monthly high there as well. So we mark that one on. Monthly high. So we are approaching an area where, we should start seeing some sort of rejection from. Nice reaction to that weekly level. Okay, you just can't argue with liquidity when you see moves like that, can you? Like, people who don't think liquidity and algorithms and institutions control the marketplace. Well, there's been a clear injection of cash at that weekly high. You just can't argue with it when it's that clean, can you?
No, there's a famous saying, if you don't know where the liquidity is at, it means that you are the liquidity.
Yeah, 100%. Taking that liquidity, we've had a pullback. We're still seeing bullish price action. For me, I would want the sweep of here. That's where there's going to be lots of orders sat. If you look at where people are going to be placing break-even points, so breakout traders and break and retest traders, there'll be lots of break-even points here as well. So, we're approaching areas of liquidity which can fuel the move higher. That's exactly why. So this high here, okay, this height here has caused a reaction. People call it a breaker block, people call it mitigation blocks, all those things. Basically, it's just rebalancing of liquidity. There's a load of liquidity here because breakout traders would have entered here and then have set their stop to break even. People would have entered from here and they would have entered from here. There'll be lots of liquidity sat below here. So for me now, it's a case of just watching and waiting and seeing for a clear reaction. So I want clear reactions and then further manipulations like that, and then I'll take the trade like that. So that's effectively what I'm looking for on Germany 40.
What would you say is the difference between, you see how you do your ranges, right?
Yeah.
What would you say is the difference from that low, from your red circle to the very top, at the top of your range?
Yeah.
What would you say is the difference between that and just a normal Fibonacci?
Not much, because it's just a range. So for me, I'm looking for specifically for premium and discount. So I also have a Fibonacci tool that I do use. Okay. Obviously we've come down to the 62 there as well nicely. I think they're different ways. They're horses for courses, right? They're different ways to basically analyze the same sort of thing. So those of us waiting for the 50% or the 62, we're looking for discount prices to take, the market long.
Makes sense.
Value, right? So the way I would often use the Fibonacci is if I'm in a particularly big range. So if I was in a big range like this, that's where I would often look for my Fibonacci tool to be drawn from here to here. Wait until we tag into that golden zone, because I know that if I'm particularly bullish, I might not have as deep as a pullback than I would do on this hourly range. So on my hourly range, for example, okay, I would be more expecting a pullback into like what I would class as extreme discount. Okay, that's where my real value is. And when price ranges are tighter, I would expect more of a chance of sweeping external liquidity firstly. So sweeping the external liquidity would be the first thing that I would want, because that will usually give me, that's what I'd class as 100% liquidity, right? So internal liquidity, imbalances, resting liquidity, order blocks, all that stuff, I class it as 30% liquidity. So if I'm looking at a trade from this order block here, okay, that's 30% liquidity. So that's not enough liquidity for me to get into the trade. What I also need is I need imbalance. So that's my 30% liquidity here, okay? So 30% liquidity here is an imbalance. And then I also want some sort of resting liquidity, which would be here. So once I have those three, that normally gives me enough to justify a trade. That then will add up to 90% liquidity. It's not as good as an external liquidity, which I class as 100%, but it will give me enough liquidity to consider an entry out of it. So then if I do get, pull back, so I get a pullback from here, and then I get my setup, and I have my specific setup that I wait for, which is structure, and then, excuse my language. Where did that go? So here, okay, so I get structure coming to the marketplace, I get a nice push, and I get bullish structure, and then I have a manipulation of that structure, and I'm entering here, okay, stop below that low. That's my classic go-to setup. It's that manipulation that I'm looking for. That is what I class as an MSU, a manipulation setup. And there you go, some free mentorship content for you guys. That for me is my my go-to setup. So I'd be taking a trade from here because I've got three liquidities, three lower quality liquidities. I class them as 30%. Once I have 90% liquidity, I can enter a trade from there. External liquidity for me is 100% liquidity. That is in bullish marketplaces. That is my absolute go-to. I love that liquidity over everything else. So if I get a sweep of external liquidity, like one of these, I will normally get a really clear reaction. This one is a good example of kind of 30% liquidity. We don't quite get down to the order block, but we tag into the imbalance, we take the rest of the liquidity, and then we shoot off here. This again, external liquidity, you normally get your really, really good reactions from those external liquidity points. So for the Germany 40 right now, or the DAX right now, I've got two areas of interest here, because I've got break-even points, I've got rebalancing points, I've got various low time frame stop losses, or I would happily also take the exact same setup down here.
There you go,
yeah, exact same setup down here. So what I try and do is I try and like grade my liquidity levels. So I look at the liquidity that's there and I say, right, what is the chance of the market reversing from this point? So from this point, 30% imbalance, 30% order block, 30%. If I get three of them together, that's then almost as good as an external liquidity. External liquidity, that's my 100%. That's what I'm looking for from a go-to. and then I don't need to rush anything because now I've got my 2 zones marked out. I wait and see if price comes down to there. If it gives me my setup, I take it. If it doesn't, I wait for it to come down here. And, I just filter out poor opportunities like that. And that I found, especially in recent years, generally keeps me on the right side of trade.
Awesome. Yeah. Makes sense.
Looking at DAX, so Lawrence, looking at DAX feed on my accounts, they're all very similar in price, which is cool. Do some testing. Yeah. Again, I'd highly recommend it, guys. And hopefully, if you guys make loads of money, I'll put my crypto wallet up next session, and you can just pay me 20%, 30%, whatever you see as most suitable. Just send it across to me. Whenever you want, whenever you get your payouts, whatever. It'll be fine. But yeah, definitely have a look at the DAX. I think Lawrence, I'm pretty sure trades your strategy, Diego, right?
Yeah, trades ability. Yeah,
there you go. So Lawrence is laughing. Can I just say as well? I mean, specifically to Lawrence and Iron Boss Lady. Well, only to Lawrence and Iron Boss Lady, because they've been speaking. Oh no, Jabir. Hi, Jabir. Glad to have you on. But in particular, Lawrence and Iron Boss Lady, can we just say a big thank you, because we are constantly asking people to say hello and ask us questions and have a chat, and it's really nice. It's made it really nice. I've really enjoyed this today, Diego. I don't know about you.
100%. Yeah, when there's more people, it's just more fun.
Lovely, isn't it? It's lovely.
Yeah.
We might reach out to you, Iron Boss Lady and Lawrence, and try. Oh no, Lawrence can't because he's at work, is he? But Iron Boss Lady, we're going to get you on as a guest. How do you feel about that? Put in the comments how you feel about that, and we'll see if we can get you on as a guest. So Iron Boss Lady, market will always go where liquidity pool is, where the buy side. Yeah, exactly right. It's going to take what's classed as the low hanging fruit first. That's going to fuel itself to go to the other side. It's just a constant market cycle. Always the target. Yeah, always the target. I get scared about hold. I don't like holding for final targets though. I get scared. My trade on Friday, my DAX trade on Friday ran to 7R in the end, and I came out at I took 80% out at 1.5. I was cursing myself.
1.5, damn.
80% at 1. Because that was my first liquidity target. So that's my trading plan, right? That's my trading plan. That's my structure. I'm working on some strategy rules at the moment where I built this really cool thing. I might show it to you guys at some point, but I don't want anyone copying me. It's mine now. I built a strategy tester. I'll show you, Diego, after. I built a strategy tester. It's really cool. So basically, you journal your trade, you put your trade in like normal, and then you can. There's a sequence that I've programmed effectively. There's a sequence that you can type in, which basically tells the spreadsheet where your trade moved to. So how high it went and how low it went, effectively, and it tests various different take profits and stop loss levels and break even points. It's really, really cool.
That's quite cool. Or how would it work? So if I were to put a trade in, let's say,
shall I just show you? Is that just easier? It's probably just easier, isn't it?
Yeah, go on then. Well, I'm just thinking. So would it be based on one trade? Because if let's say one trade you come out at 1.5, it goes to 7R, then does it just analyze the data based on that one trade?
Oh, it's really cool. It's better than that, right? So you see it? Yeah. So this basically is. I'll just show you the first few columns. This is basically just basic journal. So date, pair, what I achieved. So this was a particularly good week. I've used it on this week. So I've been basically just working on the spreadsheet, make sure it works okay. This is a particularly good week, okay? So 13% that week, fantastic week, 81% win rate, much higher, about 20% higher, 10 to 20% higher than my average win rate. I average about 65%, so really, really good week. These are all the results that I got. So I had a 13% week, fantastic week, really, really happy. What this then does, this strategy tester, is it uses this sequence, and I'll talk you through how it works in a minute, uses this sequence to basically tell all of these columns whether or not it would have won more or less. So this column is 1R with no break-even point, 2R no break-even, 2R break-even at 1R, 3R no break-even, 3R break-even at 1R, and so on and so forth. Okay. Return shows me that if I'd held my trades for 4R and I never went to break-even, I would have got 24% out. And whilst my win rate would have been lower, I would have made twice or nearly twice. This one, for example, very, very close. So it goes to 4R and break even at 2R. So I would have got 20% out of this week. Same win rate as this. But because this one went to break even at 2R, this trade ended up at break even, whereas this trade didn't. I'll show you how it works, okay? Can you see my new tab?
Yep.
You can, yeah? Okay. So this trade, the sequence for this trade is here. So 0, 2.3, minus 0.64. What we're saying is that the trade started at 0, okay? It went up to 2.3, it came down to minus 0.6, and then it finished at 4, okay? All this sequence does is it tells the spreadsheet effectively how the trade moved after you took it. So 0 up to 2.3. I don't know if you can see that. I'll zoom in a little bit. Yeah, nice. 0 up to 2.3, back to minus 0.6, and then finished at 4. So then what it does is it goes through all of the strategies, which you plug in here, goes through all the strategies, and it basically works out which ones would have made money and which ones wouldn't. So all of these ones would have been fine because they all went to 3, okay? These ones, however, that went to break even at 1R, 2R, they would have all come back to break even because by the time the trade came back down to here, as you can see, it would have taken them out. However, these ones that didn't have any break even points, that one won 4 and that one won 3 and that one won 2, because if you had never gone to break even, then your trade would have still been active at this point, and then it would have obviously gone up and hit your take profit. So I wanted a way to kind of properly analyze data and analyze data via basically how the trade moves, and I couldn't find anything out there. So I was like, well, I'm just going to build it. I'm just going to build it and see how I get on. And I had a look around and I found some similar sort of things, and I kind of collated a few things together from what I found, and I built this strategy tester. I'll send it across to you. Have a play around with it. See what you think. It's really cool.
Oh, no, that's pretty decent. I've got a way to do it, but it takes forever on Trailing. You just mechanically put the data in and screenshots, but this is much more effective. Yeah, that's quite cool.
So basically, if you have, let's say you wanted to work out whether or not, and again, we keep coming back full circle, but you want a trading psychology hack, just gather more data. I mean, I think that's a bit of a running theme, but the more data you have, the better a trader you will be, because the better you understand your strategy. I know that week, for example, if I'd held my trades to 4 and I'd never gone to break even, I would have made twice as amount of money. Now, that was a particularly bullish week, and the trades were particularly good and particularly clean. So once I plumb more data in there, it will show me how effective or not effective my trading strategy is, and that's something that I've been working on for the last few weeks. And the week before last was a bit of a tighter week, so the results were different. But there'll be a sweet spot that I'll find eventually. And once I've got 6 months worth of data in there of live trades, I can revisit my trading plan, and I can say, right, well, I now need to hold to 4R and I never go to break even, because I've proven with the data that it's actually the most profitable way for me to trade. But yeah, so what you would do, Diego, because I know you go to 4R anyways. Let's say you want to test out up to 10R, for example. How many trades go to 10R? So you could do your 4R, you do a couple of different break-even rules, and then you could do like a 5, a 6, a 7, an 8, a 9, and a 10 in each column. And then all you have to do is you just have to draw out to 10. So where you trade draw out to 10, and then you effectively watch whether it goes to stop loss or whether it goes to take profit. And each leg you mark. So if it goes down to 2, that's your next number in sequence. If it goes back to 0, you then put a 0. If it goes down to 4, you then put a 4. If it goes down to 1, you go to 1. And then if it goes back to minus 0.5, put minus 0.5. And basically it understands, the sequence tells the spreadsheet how the trade has moved. It's really cool. I'm pretty proud of it, as you can probably tell.
No, that's pretty decent. I need to get a lot of data per market, I guess.
Yeah.
Probably per pair, just to get some volume on some reps in.
I see it as a work in progress sort of thing. Like for me now, so I have my Notion journal, which I like and it looks nice, but for me now I'm just using this because I don't really need to I think the whole noticing your emotions and all that stuff, that's good for a new trader. I think as an experienced trader, you're trading by now, right? So all of the fancy stuff that I did at the start, I don't really need anymore. I need a screenshot, I need a result, and I need a way to understand how can I get better as a trader? How can I make more money out of my trades? Because my strategy works, I've proven it works, I've got the backtesting data to show that it works. So now I need to be like, how can I make more money? And for me, this is that way of establishing, what can I squeeze out of my trades? Because I think so many people don't know that, right? You follow a strategy, you set a take profit point, and I think one of the damaging things to a trader's psychology is they'll often see trades go off without them. And so what do? The next trade, they hold it for a higher target, and it goes to your first target and then reverses on you and you lose your trade. Yeah, and then you make mistakes, right? Well, no more do you have to do that, because the strategy tester will fix all of your problems.
That's quite cool, man. Have you ever thought of like automating it with some form of an algorithm or some AI?
Well,
like machine learning and stuff.
yeah, that's kind of this is my like dipping the toe in the water. So I'm building at the moment a journal, effectively. So when it's done, I'll give you a copy of it because I'm doing it for my students effectively. So I'm building a journal which is basically looks like TradeZeller, operates like TradeZeller, but doesn't have live data in. So whereas TradeZeller will pull your data and fill it out for you, there's lots of things that people don't like about TradeZeller. Like if you start a new strategy or you move to a new account, you lose all your data. So I thought, well, if I can build something, and I'm using a designer for this, if I can build something that looks like TradeZeller and operates like TradeZeller, but the trader just has to type in Euro USD, entry, exit, result, and everything else is automated, because that's pretty simple to do, then that kind of gives you the best of both worlds. And I think a lot of the issues with TradeZeller and other journaling tools is every time you move to a new account, you lose your data, don't you? So if you're doing a proper evaluation and you move to phase 2, you start again. Then when you go to your live count, you start again. So very similar to my FX book, you can't trade your strategy over multiple accounts. So I wanted to provide a fix for that. So the big aim will ultimately, to, like you said, Diego, the big aim would be to have it automated where you can plumb in your account to it and it will feed data from that and take your stop loss and take all that stuff. And then, look at AI and things like that. But that's the down, maybe a little bit into the future. I'm still working off an Excel spreadsheet.
No, proud of it. Yeah, we have to start somewhere, but that's cool. That's definitely a problem a lot of traders have as well. There's also we're trying to fix it.
Yeah. What would you say then? So obviously I've done a lot of talking today. I'm conscious of that. We've got 4. I think we've got 4. Yeah, so we've got 4. So let's go through them again. So number 1, collect more data. Number 1, collect more data. Really, really clear. Number 2, refine your strategy always. Number 3, the magic you're looking for is lost in the work that you don't want to do. Just work harder. The other thing I always say to my students is if you want to make it in trading, work harder than everyone else. Outwork your competition. If you see me on my Instagram and I'm saying posting charts or backtesting sheets or whatever it is, do more than me. If you see Diego in his community talking about his analysis and posting videos and sharing journals and whatever it is, do more work than him. You're probably never going to catch us up because we've both got 10 years on you. But you might get pretty close to us if you work harder than us. Simple as that. Number 4, daily routine and run it up for 30 days. Build a daily routine, run it up for 30 days, see where you end up. And then number 5, Diego, is on you. I'm going to give you the job of finishing it off.
Number 5, no problem. I would say look at your best performing days and analyze. It's similar to one of our points, but if you look at your best performing days over, let's say, a period of 10 amazing trading days, and also look at 10 terrible trading days, identify the habits and the routine that led you to that outcome.
Love that.
So if, for example, when I have a really good day, it means that I'm following my A game, such as, I'm doing gym in the morning, cold shower, the whole shebang, coffee, live streams, loom videos, forecasting, and I'm just in sync and I've got my alerts. That's when I'm on point. Then the days where I take losses, coincidentally, it's the days where I don't go gym. It's the days where I don't do a live stream, and it's the days where I just trade a setup that just formed right before my eyes. So if you can identify those sort of pre-leading habits before your trading session, that would make a really, really big influence in your trading. But you have to be self-aware of it. Don't just trade and let the day sort of grab you and la, 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 and you just trade. No, you need to actually be aware of what's happening and how you're managing that day. So if I were to summarize it, identify your predetermined habits prior to your trading session. Identify your A game habits.
Identify your A game habits. Your A game habit. Love that. It's great. And, noticing those differences, because most people come out of bad days and they're like, I know why I went wrong there. I know why I had losing days. I've done it recently where I've had a rubbish day and I've come out of it and been like, well, I should never have taken that trade in the first place. And I took that because I was peed off that I missed my London entry, or my London entry stopped me out and then ran off without me. And so I took a rubbish trade in the New York session that I never should have taken because it didn't quite meet my rules. When you have bad days as traders, if you've got experience, so you've got a strategy, you've got a trading plan, and you've got a back testing journal and a live journal, I would class you as more experienced than most. If you've got those 4 elements, and that, if you want a trading psychology hack, that actually playbook there: strategy, trading plan, back testing journal, live testing journal. Those 4 things there. You want to hack your trading strategy, it just starts there. That's the basics. The amount of people that we watch in this right now that don't have all 4 of those, I would probably say 90% of people watching this and 90% of traders, in fact, it might be the 95%. I would say that most traders do not have those 4 things: a clear strategy, a trading plan for that clear strategy, a back testing journal, and a live testing journal. Anything else you'd add to that list that you need as a trader?
No, that's
it, right? That's it.
To be fair, yeah.
So that's where you need to start. If you're not getting the results you need as a trader, that's where you need to start. Those 4 things, really, really simple. That will get you. And obviously, you can't just build them and not fill them out. You've got to fill them out for a couple of months, right? Fill them out for a couple of months, and then you're laughing, right?
This thing, you need to fill out. You can't just leave your markings and your take profit, your tool chart on your chart, and then you just scroll through it. You have to physically put the data and the numbers. It's all about the numbers. Have the numbers down somewhere, whether it's Notion, TradeZilla, journal, whatever. You have to have it down somewhere so you can look back and do what Chris done and just say, okay, this is working, this is not. I need to improve it. If you don't have that, then you need to ask yourself, you deserve not to be profitable. Just being honest, and it is what it is, to be fair.
I think that's really key point is that you need to, as a trader, have the basics nailed. And you want to hack your psychology, just get the basics done. All the stuff that me and Diego and any other experienced trader who's making good money has as just a bare minimum, just get that done. And I can't remember how we came to that point, but with that, you'll then start noticing when you have good days and you have bad days. And your bad days, you'll be able to go to your trading plan, you'll go to your journal, and you'll understand that you've made mistakes. Because bad days, and when you've had a bad day, the amount of times when I was younger, right, or say younger, a younger trader, the amount of times that I would not fill out my journal when I had a bad day. Used to do that. I'd fill it out when I had a good day, but I wouldn't fill it out when I had a bad day.
Yeah? I used to do that, but then when you start finding out, hold on a minute, the losing days is when you learn the little magic. So you have to fill in the losing days.
Those are the days you need to fill out more, right?
100%. Now it's different. Now I can't be bothered to fill in the winning days, to be fair. It's just the losing days I want to fill in the losing days.
100%. And I think, the trading journaling will never become fun. It will never be interesting. But in the grand scheme of things, it doesn't take very long. That's the one thing you got to remember. It doesn't take very long. Unless you're over trading, it shouldn't take you longer than 5 minutes, I don't think. I mean, if each journal entry should take a couple of minutes, 2-3 minutes, 3 minutes, and I personally think you shouldn't be trading more than 2 or 3 times a day. Tops, absolute maximum.
Wow, that's a lot. That's a lot,
isn't it? A lot. Yeah. Which is interesting because as a new trader, you take like 10 trades a session often.
Cool. I used to take 30 in the morning.
Yeah.
In London.
You go to your MT5 and you just got like pages of like lost trades for one session.
Yeah.
0.01 entries.
Literally.
So I think that wraps it up nicely. Identify your A-game habits. I love that. And it's such an important thing to do. Understand when you're going wrong, why you're going wrong. Understand when you're going right, why you're going right. And then just stop doing the things that make you go wrong and continue doing the things that make you go right. It's that simple. There you go. You're now a full-time trader. Quit your job. Quit your job now. Done.
That's it. Yeah, literally.
Oh, that was a good session. I enjoyed that.
None of that's a lot of value as well. I'm thinking of just copy pasting these bullet points and just you can send it to your email list. You can send it to a Twitter thread from it. There's a lot. This is like 20 years experience, and it's just the traders that are listening and they actually take action. They'll make a difference, not just watching the live stream and that's it. They forget, but the ones who actually take note and implement it, those are the ones you have to watch out for.
100%. Lawrence, you should not be doing your journal at the end of the month. You should be doing it daily. All right. So if you're doing 40 trades at the end of the month, then that's your own fault, mate.
Imagine journaling 40 trades at the end. Well, that is.
It just wouldn't get done, mate. It wouldn't get done. I would do like 2 days worth and I'd be finished.
Yeah. But now, though, I mean, back in the day, if I was taking 100 trades, I wouldn't journal. I would not journal. I'm not gonna lie to you. There's no point.
No.
But that's what separates an amateur from a pro, isn't it? So that you do less trading and then you can journal. But yeah, I don't know how the scalpers do it. I don't know how the scalpers do it. Taking 5-10 trades a day.
Maybe they just journal a session, maybe.
Yeah.
The ASR after each one. Okay, fine.
ASR,
He's recovered himself. Well done, Lawrence. Well, look, we have run over a little bit today, but it's always good to do that. I am Boss Lady and Lawrence. Thank you so much. We're going to reach out to you guys to try and arrange you guys coming on here as guests. It'd be great to have you guys on and interacting with us. And then, yeah, Diego, thank you for an awesome session, mate. I really enjoyed today.
Awesome, man. Yeah, fantastic session. Yeah. Thanks for the value and the gems you dropped in this one.
No problem. And to you, mate, and to you. All right, see you later, guys. We'll see you next week. Next week, 12:30, Monday. Let's go.
Let's get it. Cool.